Howdy, everybody. Welcome to Liberty Call. Today is Monday, June 17th, 2024. I hope you're having a fantastical day out there in the interwebs. It's a beautiful yet warm day here in Colorado. It has been quite toasty the last yesterday and today, so it's going to get cool. I think tomorrow's high is like 69, and then the rest of the week's like 70. So very, very excited. So anyways, I got meetings all week and next week, and so I'm going to be a very busy beaver. So if my shows aren't quite on schedule, I apologize. Sometimes client meetings take precedent over talking about the news. All right. Well, if it is your first time watching Liberty Call, if you could do me a favor. Give me some thumbs up, a like, share, subscribe, or follow, and press the notification bell. All righty. Well, let's go ahead and get into today's numbers. Dow Jones finished the day up 0.49%, 188 points. Closed at 38,778. S&P 500 was up 0.77%, 41 points. Closed at 54,73. NASDAQ up 0.94%. Keeps running. Up 166 points. Closed at 17,855. The VIX was also up today, 0.71% at 1275. Canada down 0.24. Brazil down 0.33%. And Mexico up 0.3%. In Europe, Germany was up 0.4%, the UK down 0.06%, France up 0.91%, the Netherlands up 0.48%, Spain down 0.3%, Italy up 0.74%, Switzerland down 0.28%, same with Portugal. Russian exchanges, both zeros for today, so not sure what's going on there. And the Asian markets, the Nikkei in Japan was down 2.01%, Australia down 0.31%, New Zealand down 1.28%. In China, the Shanghai was down 0.55%, the Shenzhen Component up 0.31%, China A50 down 0.17%, DJ Shanghai down 0.4%, Hang Seng down 0.03%, and the Taiwan weighted down 0.04%. All right, so those are the markets for today. Very, very exciting stuff. I know you're on the edge of your seats. All right, let's get to this week's weekly economic update. Stocks notched a solid gain last week, driven by the Fed's decision, May's inflation report, and Apple's AI-related news. I'm not sure what the Fed decision had to do with anything, quite honestly, because they didn't do anything other than just talk about what's going on. The S&P 500 rose 1.58%. The NASDAQ picked up 3.24%. The Dow Jones Industrial Average lagged the most, slid 0.54%. Internationals, which fell 1.44% for the week through Thursday's close. Let's see here. S&P 500, NASDAQ lead, Dow lags. Market leadership took a familiar form with tech-heavy NASDAQ. The tech-heavy NASDAQ led while the Dow trailed for the second week and 4 out of the past 6 weeks. Stocks trended higher at the start of the week as investors cheered an artificial intelligence update from Apple. By midweek, the market had split, with the NASDAQ and S&P 500 moving higher while the Dow lagged. Investors were upbeat after learning that consumer prices rose less than expected in May and that the Fed decided to keep rates steady. I think most people wanted to see the Fed raise or lower rates, but you can pretend that was a good, everybody was happy with that. However, some investors were unsettled after learning Fed officials had shifted their outlook and now only penciled in a single rate cut between now and year end. A few months ago, the Fed had indicated as many as 3 cuts were possible. Yeah, people were crying in their Cheerios over that. All right, busy week for news. Last week was chock full of market-moving events between Apple's AI update, inflation, and the Fed. It was a toss-up. Which one influenced sentiment the most? AI's outsized role in driving market momentum continued last week. OpenAI's deal with Apple arrived at the start of the week, and the news followed OpenAI's deal earlier this year with Microsoft. These companies are mentioned for illustrative purposes only and not a recommendation to buy, sell, or hold any security. Wednesday morning, the CPI was announced, and a few hours later, the FOMC updated its monetary policy. Again, they didn't update anything. They just said that they were standing pat. These pieces of news have only arrived together 13 times since 2008. The FOMC kept rates steady at its current 5.25% to 5.5% target range, a widely expected decision. However, the tame CPI report caused some volatility as investors grappled with how the report may influence Fed policy. Key economic data this week. Monday, the Empire State Manufacturing Index and Fed official Patrick Harker speaks. Tuesday, we have retail sales, industrial production, and Fed officials Thomas Barkin, Lori Logan, Albert Musalem, and Austin Goolsbee speak. Yeah, you always want to listen when Austin talks. Thursday, we have housing starts and permits, jobless claims, Fed official Thomas Barkin speaks, and the EIA petroleum status report. And Friday is existing home sales. Just a few companies reporting earnings this week. On Monday, today, we have Lennar and La-Z-Boy. Thursday is Accenture and Kroger. Friday is FactSet Research Systems and CarMax. All right, so that is the weekly update. Let's go ahead and dive into the market recap. S&P 500 hits record high as tech rally continues. Get to my notes. Here we are. The S&P 500 reached a record high on Monday, driven by strong performances in tech stocks despite rising treasury yields. Leading the charge were Amazon, Microsoft, and Apple, with Apple gaining over 2% as it pursued advancements in artificial intelligence, aiming to surpass Microsoft in market value. Apple's market cap hit $3.33 trillion, closely trailing Microsoft's $3.35 trillion. Analysts from Wedbush predict the tech bull market will continue and expand as other sectors such as software, consumer tech, cybersecurity, semiconductors, and infrastructure over the next 12 to 18 months. Philadelphia Fed President Patrick Harker expressed caution regarding rate cuts, suggesting that only one rate cut might be appropriate if the economy performs as expected. However, he did not rule out possibility of two cuts or none at all, emphasizing a data-driven approach. These comments precede the release of the May retail sales data, which will be scrutinized to gauge consumer strength. Several Fed officials, including New York Fed President John Williams, Minneapolis Fed President Neil Kashkari, San Francisco Fed President Mary Daly, and Richmond Fed President Thomas Barkin are scheduled to speak this week, providing further insights into the Fed's policy stance. In corporate news, Autodesk saw a 7% increase following a report that activist investor Starboard Value acquired a $500 million stake and is advocating for changes. GameStop shares fell 11% after announcing cost-cutting measures through store closures and failing to outline a clear strategic direction. AMC Networks plunged 34% after announcing a $125 million convertible offering, while Virgin Galactic dropped nearly 16% following a 1-for-20 reverse stock split aimed at boosting its share price amidst a challenging year. Looking ahead, companies such as Lennar, Kroger, Darden, and CarMax are set to report quarterly earnings, which will further shape market movements. All right, so that is everything there. Let's dive into some news here. 5 stocks account for 60% of the S&P's year-to-date return, charting for the S&P 500 the S&P 5 versus the S&P 495. This comes from Zero Hedge. All right, let me get my notes. All right, the S&P 500's year-to-date gains are heavily concentrated in a few tech giants, with NVIDIA alone contributing 34% of the 14% increase. 5 stocks, Microsoft, NVIDIA, Alphabet, and Amazon and Meta, have collectively surged 45%, now making up 25% of the S&P 500's market capitalization. These companies have posted significant earnings growth, with Q1 earnings per share growth of 84% year over year compared to 5% for the typical S&P 500 stock. Analysts have subsequently raised 2024 earnings per share forecasts for these stocks by 38%, while reducing forecasts for the rest of the index by 5%. Despite the strong performance, the gap in earnings per share growth is expected to narrow from 31% in 2024 to just 4% by 2026. The performance disparity between the S&P 500's cap-weighted index and its equal-weighted index is the widest in nearly 24 years, with the equal-weighted index remaining unchanged since early 2022. This reflects poor breadth, as only a small percentage of stocks are outperforming the S&P 500. Currently, the cap-weighted S&P 500 is overbought or in overbought territory, with a relative strength index of 75, yet only 49% of its components are above the 50-day moving averages. Excuse me. In Q2, the 6 largest mega cap stocks have risen at an average of 11.5%, while the rest of the index has fallen by about 3%. Apple notably surged 8% last week, adding $260 billion in market cap due to stock buybacks, retail buying, and a gamma squeeze, despite mixed initial reactions to AI developments. The sustainability of this momentum is questionable, as such rallies have often reversed sharply. Historically, momentum reversals have led to significant market shifts, as seen in past events like November 2020. Like the November 2020 rally following positive COVID-19 vaccine news. The current rally is driven more by valuations than earnings growth, raising concerns about a potential bubble. Yeah. Keep the needles away. The S&P 500 Momentum Index earnings multiple has tripled since May of 22, outpacing even rapid growth of leading tech stocks, suggesting an overheated market. Veteran traders caution that the situation won't end well, indicating potential risks ahead for investors. Yeah, so it's just a little teeny bit of stocks, which is carrying that giant portfolio of 500. So be careful, folks. All right, last up comes from our friends over at First Trust, Mr. Brian Westbury, their chief economist. This week's article is Replacing Taxes with Tariffs. So you may have seen a little bit of news about that over the last week or so. All right. Last week, Donald Trump proposed a bold idea of replacing the income tax with a tariff on imports, while Washington, D.C. ridiculed the idea. Yeah, because why would they want to stop robbing the American people? While Washington, D.C. ridiculed the idea, the average American found it intriguing. However, it is clear that this proposal would not work in the current system. Replacing income tax revenues with sky-high tariffs would shut down world trade, just as the Smoot-Hawley tariffs did in 1930, which played a role in initiating the Great Depression. Yeah, who was president then? FDR. Despite its flaws, well, actually, he might have. I think he was elected in 30, so I might be wrong. So either way, it was either Hoover or FDR. Despite its flaws, the proposal can serve as a starting point for discussion. It highlights the lack of what is this word? A lack of intuitive learning or iterative learning by the government, a process that is prevalent in the private sector. Examples such as Elon Musk's SpaceX and its iterative development of the Starship demonstrate how each launch has gone further and achieved more success. Similarly, Henry Ford applied its iterative learning with the automobile and assembly lines. In contrast, the government seems to lack this approach. Glenn Harlan Reynolds shared an example of the space shuttle, which was meant to be reusable, but ended up costing over $1 billion per flight. Yeah, good money well spent there, folks. Musk, however, through his innovative booster reusability, has significantly reduced the cost to a range of $3 to $5 million per flight. The private sector consistently outperforms the government in efficiency and progress. There's a shock. Returning to Trump's proposal, it may seem ludicrous when viewed from the perspective of the Beltway insiders. Critics like Paul Krugman, who's a moron, argue that the tariff would need to rise to 133% or higher to generate the same revenue as the income tax. While tariffs and excise taxes funded the U.S. in the 1800s, the federal government was much smaller back then. Yeah, because most of the things the federal government does today are unconstitutional and should be shut down. And I mean, they're bringing in $3 or $4 trillion a year in revenue as it is. They got plenty of money to spend. They just would rather stuff it into their pockets than actually do anything worthwhile with it. The government lack of imaginative thinking, and reliance on static scoring models limits its ability to envision new approaches. Bureaucracies with their entrenched systems and lack of incentives for productivity and iterative learning hinder progress. At least Trump's proposal challenges the conventional thinking within the Beltway. Here's a novel idea. Get rid of the republic. We don't need it. Get rid of the military. Get rid of all the stupid agencies that are just a waste of resources and productivity, and put those people to work in the private sector, because any of the smart ones will do good, and any of the failure, the people who are just hanging on collecting a paycheck will probably wind up on the breadlines and starve to death. All right. The problems the U.S. faces today are not new. They persist from the 1960s and the 1930s. Despite the government's growth, these problems seem to be worsening. Instead of dismissing Trump's proposal immediately, it presents an opportunity to discuss the size of government and how it's funded. While it may be more comfortable for the Beltway crowd to maintain the status quo, it is important to engage in open dialogue and explore new ideas. By taking this opportunity to discuss Trump's proposal, we can evaluate it within the context of history and the current state of affairs in the U.S. I mean, it's all going away at some point. I mean, the republic is on its way towards collapse. Now, how long it stays together, it's a mystery to me. I have no idea. Could be a few weeks, could be a few years. I don't know. I'm hoping it's sooner than later because I'd rather go through this change while I'm younger. But hey, if I'm 70 when it happens, it's just the way it is. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. If you need to get your financial crap together, give me a call. I'll be happy, or shoot me an email. I'll be happy to work with you to get your finances back on track and get you planning on those long-term goals like retirement, kids, college. Oh, I wouldn't send your kids to college, but if that's really what you want, I'll help you do it. So, all right. Well, hope everyone has a wonderful evening, and I shall talk to you again next time. Adios.